Happy Monday, everybody. I hope everybody had a great weekend. Today is Monday, October 4th, 2021, and this is your market update video. So another pretty busy week last week, to say the least, and this week is off to another interesting start. One thing that can be said about these times and these markets, as usual, never a dull moment. So in short, last week we saw another down week. The Dow was down about 1.3%, S&P down 2.2%, and the NASDAQ was a big loser on the week, down 3.19%. That all being said, the S&P 500 is still leading the way year to date on the positive side. Let's dig in day by day, and then let's talk about what's coming up on the week ahead. So Monday, we saw small cap and cyclicals actually do pretty well. The Dow was up for the day, but with the 10-year Treasury yield moving up, the S&P 500 was down only slightly, though, about 0.25%. Tuesday, we saw volatility pick up again. As we discussed last week, Washington took center stage with concern about the debt ceiling and the government shutdown. And in case we weren't watching, Janet Yellen decided she wanted to remind us that if we don't update the debt ceiling, then we're going to go into financial crisis. And then we also saw JP Morgan announce that they're actually going to do the prudent thing and actually plan for a U.S. default on their debt. So we'll see what that looks like. The Fed Chief Powell also spoke about the fact that inflation looks like it's going to last a little bit longer than he thought it was, just a little stickier than he thought it was before. So the S&P 500 was down pretty big, down over 2% on the day. Wednesday, we got some stabilization. The 10-year came back down a little bit, off where it was testing some recent high levels. And the S&P 500 was up slightly for the day. Thursday, we had the selling continue. Blame can go anywhere you like. We can start with China and their power crunch. The core PCE inflation reading came in, jobless claims spiking, GDP report, just to name a few. Technical support for the market was actually breached as well. So selling came in again, took the S&P 500 down another 1.19% for the day. Friday, we got the stocks gapped up for a change, actually on some pretty incredible news. The news was some people even said game-changing news. So let's talk about that. So first, there was no government shutdown. So the bill was signed. As I told you last week, both the government shutdown and the debt ceiling arguments are probably just for show, but we'll see what that looks like. The bill was signed only a few months, though, into the government shutdown. We'll do all this again in a couple of months. The real news actually came from Merck. So Merck announced that their COVID pill reduced the chances of hospitalization and death by half. So, and that obviously, as Merck went up because of that, actually it's probably its best days in a decade, The vaccine producers went down. I don't know if really that makes sense. We can talk about that, or maybe we'll just leave that alone for now. As I've said for over a year, therapeutics and testing are what's going to get us out of this. It seems like that's coming closer and closer to reality, so we'll just have to see how that goes. As long as I know if I have it, then I could do what I need to do with that, and then as long as I know I won't die from it, then those are really the big key is what we're looking for, and the more that this comes about, the better chances and the closer we're getting to that being a reality. The market loved it. There was a short hiccup midday on Friday when the Fitch rating agency warned that this whole political process with the debt ceiling could put a dent in the U.S. Credit rating. It's happened before. We'll just see how that goes. But that was not enough. The market in the later afternoon ripped higher and then closed up 1.15% for the day. Not bad to end the week, but remember, down for the week, as I mentioned just a few minutes ago. Last week, we were hit with rising rates, Washington drama, hawkish Fed shift, and some high inflation data. But it's not as bad as it sounds. So a lot of that's not new stuff. So next week, we get earnings season starts again. We have a few stragglers this week, but most start on Tuesday of next week. You usually start with the banks. So this will be major news. This week, we still have to get through jobs week, which remember, Wednesday, Thursday, Friday, we all get big labor news. Friday's the big one. We'll talk about that in a minute. But remember, last month, we saw a huge miss in the non-farm payroll numbers. So watch for an adjustment to last month's, and also look for a big number this month. We'll just have to see how that comes about. To get the outlook to turn better, what do we need to do? We should watch for a few things. This whole rise in the 10-year Treasury yield, that needs to get back to a gradual and orderly orderly move. Remember, we've talked about that in the past, gradual and orderly. Also, this whole Washington drama needs to finish with the debt ceiling cleared up, as well as maybe a $1 to $2 trillion infrastructure bill passed. We'll see how that goes. The Fed needs to stay on message about where they're going to go with tapering. We know this. The market's already put this into the pricing. So we'll see as long as they stay on task with that. And then maybe even get some good news on the supply chain. Any combination of these things is going to make the outlook turn positive again, and that's really what we're looking for. So what are we watching for this week? Remember, as I mentioned, we're starting on a downside today, but you never know where the day or the week is going to end up. As I mentioned, all eyes are going to be on the Friday non-farm payroll report. There's a bunch of Fed officials speaking this week, and they always leave room for some surprises. Some economic data on the service sector tomorrow. Again, as always, a pretty full week. So we'll be keeping an eye on the dollar that's creeping up out of its recent trading range, that pesky 10-year Treasury yield, oil prices, natural gas prices, just to name a few, and so many more things. We're still in the weak season of the market. Now, remember, October is not the worst month of the year, but it is host for some of the biggest market swings. So watch out on that. As always, stay in touch. Let's talk about how we're positioned to go into the final quarter. Watch for our Friday planning video. We're in the middle of a series of videos that are talking about action items to take before we get to the end of the year. So for now, stick to the plan, keep your eye on the goals and how we're going to reach those goals. Have a great week.